Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Ritu Poddar, Head Mutual Fund Research and Product, joining in. Ritu, good morning and welcome to the show. Let me start off with my first question with regards to the August data that has come in with regards to the mutual fund segment. Overall, the AUM for the industry has gone marginally by around a percent over the previous month. Now, what is it that is keeping the AUM growth slightly muted at this point in time? And secondly, what's the assessment of the data or of the trend that you're picking up from March to now?
As you correctly said that, industry AUM is actually, muted for the month of August, and we have seen, a 1.3% of, rise in terms of AUM. So that mostly you can say, because your broader indices has, performed well. So this is a mark to market, you can say,
Hmm.
because continuously from March to till now, we have seen a good upside in our, indices overall. So the one definitely there is, the impact which we are seeing in terms of AUM has grown up. It's because of the market. The second is, yes, debt market also performed very well from, the month of March to till now. So that's the another reason we have seen a good inflows in the debt category as well. So that's the two of the major reasons which we can see, the growth in terms of AUM. But at the same time, the growth is very, neutral kind of a thing. So we can say there is a, the market getting increasingly, disconnect from economic situations and, corporate fundamentals. So which is actually, pushing investors to book profit at this point of time. And secondly, there is, we are seeing because of this COVID, lot many job cuts are there. So actually, people are withdrawing to, fulfill their actual needs.
Hmm.
These are the major reasons we can find it out.
Right. And overall as well, if you talk about the total industry, there has been a net outflow of almost 14,500 crores, and the major outflow has happened in the liquid and overnight funds. Any reason that you're picking up on that front?
So basically, liquid and overnight funds, so corporates generally park or utilize these categories to park their very short-term kind of a funds. So now, slowly in study, we are seeing that economy is opening up. So the one of the reason could be that they are, utilizing their working capital, and that is what the withdrawal has come out. And then second is the returns on these categories actually has drastically come down. So the another reason could be that, the investors are looking a step ahead, and they are just parking their money to the ultra short and money market kind of a categories.
Hmm, hmm, hmm. Right. And then apart from that, an outflow that has happened with regards to where equity funds are concerned. Now, if you talk about equity funds, it's a second consecutive month where we've seen an outflow, whereas five consecutive months of decline, if you have to put it like that. What is this kind of data suggesting? I mean, is it that people are withdrawing from mutual funds to remain cautious? Or are they trying to park their money in other asset classes, taking the volatility or probably the cautiousness into consideration?
So mostly, if you see that this month we have seen around 4,000 odd crores, kind of outflows from equity overall. Against, last month we have seen around 3,845. Out of 3,845, we have seen majorly from the close-ended schemes where rollover cannot be happen, or it's this is not the right time to roll over those kind of schemes. So if we'll compare, open-ended funds outflow, so last month it was 2,480 crores, and this month we have seen a 4,000. It's a incrementally very huge jump we have seen. So the major reason what we can see is definitely, as I said, there is a disconnect, from the actual economic situation and the fundamentals which investors are seeing. And secondly is, yes, the HNIs and the ultra HNIs are not putting their lump sum, or what whenever every time they are trying to book their profit and parking in the safest asset, and they are just maybe they are waiting for the right time to invest in equities, or utilizing the staggered manner to invest into equity.
Right. So, when do you expect normalcy to come back, especially with regards to where equity investments are concerned? Do you think in another quarter, say by Jan or something, we will see an uptrend? Or do you think this kind of sluggishness in the equity side of mutual funds is going to continue?
So we believe, like definitely this the next quarter, definitely we might see the same kind of a scenario, because people are still not comfortable with the market valuations and the things happening around market. uh, uh, if we talk about the COVID cases, so in the last few months we have seen that last month we have seen that the cases has been increased
Correct.
rather than decreasing, or despite that economic is opening up. But the cases, so the mentally people are the not prepared as of now. So we might see one more quarter to return or get back the inflows into our equities.
Right. And overall, if we are saying that, incidentally, the debt segment is also seeing a withdrawal, equity segment is also seeing a withdrawal. And if people are withdrawing to park their money in other asset classes, are you seeing any uptrend that's coming in with regards to where gold ETFs go?
Uh, yes, definitely. If you will talk about the gold ETFs, then gold ETFs has seen very good inflows in last 4 5 months. And the secondly, I think this month we have seen around 908 crores inflows in gold
Hmm.
against 921. So the major reason could be because this month we have seen one sovereign gold bond funds RBI has launched. So that is the one reason people are preferring that, or gold as an asset class. If they are investing, then that is one of the option people are investing. So going forward, we might see good inflows in gold ETF, as RBI has not announced any calendar for SGB for the next second half of this financial year. So we might see going forward a very good inflows in gold ETF.
Right. And the other ETF segment has also continued to get a lot of investor traction as the category has received a net inflow in the month of August. New ETFs are also being launched. So, are you seeing a lot of retail interest on that category as well?
uh, Definitely, if you'll talk about, or if you'll see the number of folios also in that particular
Mm,
category, that has been increased drastically.
mm,
Very good numbers we have added in this particular category. And somewhere uh, retail investors also parking their money in the new ETFs which is coming. Even if we'll talk about the simple Nifty 50 ETF also, then there are 80 to 90% times your normal ETF has outperformed the large cap funds in last 3 or 5 years. So somewhere people are investing in these kind of ETFs to
mhm.
park their money.
Right. And what is the SIP data indicating? Because it's a marginal decline on a month-on-month basis, but we're almost at multi-month lows, in terms of where the data that has come in for the month of August goes. What is this indicating?
So basically, if you see the SIP data, as you said that correctly said that we have seen marginally dip, but I would say retail investors are become very much understanding, and they started understanding the market because previously on the historically, if you see these kind of situations, we used to see a huge number of seized SIPs, which is not happening at this point of time. And we believe uh, definitely slightly because as I said that because of this economic situation we are seeing the lot many job cuts is happening, so maybe people are not getting that their regular incomes, and that's the reason they are stopping their existing SIPs and all. So that's a very marginal dip if you will see.
Right. And with the overall data that's coming out for the month of August, as well as the trend that we're picking up of the last couple of months, Ritu, are you picking up a trend for the markets from here on? Because uh, in terms of valuations, we're really expensive right now. I mean, there's no reason why the markets are rallying. We are mirroring what's happening in terms of global markets. So there is a disconnect on the fundamental side versus what's happening in the markets. But taking the mutual fund data into consideration, do you see a slight chance where there is a possibility, say towards October, November, December, we could see a mild correction or probably a blip that could come in where there could be a downtick?
Uh, Definitely, as you said, that there is, no reason that why marketing is going up, and we all are, thinking or, trying to find it out why market is going
Correct.
up. So definitely that is the major reason which, investors are finding right now, and that is what we are not seeing a good flows in the industry. So going forward, if we talk about the equity markets, so we believe the US election is coming out, so people are worried about what will happen. Though at this during this month, if you see there are a lot many new NFOs are coming into the market, so that might push your overall sales. In terms of we might see a good inflows on that particular segment, but overall I mean, we are not seeing very good inflows in next quarter as well. If you look at the large segment like HNIs or ultra HNIs kind of segment, I believe is still there is a some kind of investors are thinking the economic and actual the market.
Hmm.
So they are if slowly and steady some kind of a correction or blip we see from here on, then we might see, or the investors can take that
Right. So overall, I mean, that's the outlook that all of us are waiting and watching as well. But thank you, Ritu, so much for joining us on the show. It was a pleasure to speak to you, and good insights that we've picked up, at least with the August mutual fund data. Let's see how September, October, November pan out. But thank you so much and stay safe.
thank you so much.